Hi guys, the S&P 500, the seasonal July-August pattern seemingly is coming in again, and I think that this time around the S&P might be falling quite a fair bit, and that's why you need to be very careful and go now the new number 3754. My God, right? Because the Buffett indicator has reached the 213% level, that gave me the very good reason why I believe that we will see some crazy number coming in. So without further ado, let's continue today's video. But before that itself, disclaimer apply as usual, yeah? Now let's take a look at this thing here. Now back in 2016, right, just prior to his election, Donald Trump, right, against Hillary Clinton, Donald Trump warned that the market was in a big, fat, ugly bubble. And Yellen was saying that politically not to raise interest rate. So that was where the S&P was trading around somewhere around this area. And where are we right now? Oh my God, we are much, much, much higher, right? This is the global Dow, sorry, the index itself. And of course, you can see that Donald Trump back then was calling for a big sell and stuff like that. But what happened? We all know the fact is that, you know, Donald Trump now don't see that. In fact, he feels that the market can go much, much higher. So this is how politics works, by the way. But if we compare and contrast right now, we almost like double the band price. And of course, the thing is this, we all know the reason is there is a lot of money coming in from the M2 money supply, and now the level of greed has hit historical level. The US margin debt has rose 87 billion in June and surpassed $1 trillion for the first time ever, guys. This is crazy because the last time we see this with a spike like this was back in 1999 and 2007. So that means that people are borrowing, buying shares like never before. And we all know that this is going to be crazy and euphoric will then come in. And now the record low investor credit. Yes, indeed, the low investor credit has hit minus $556 billion. That means that everybody is buying, 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 borrowing, borrowing, borrowing. And the fact is that it's borrowing at a high interest. So that is why you can see right now the emerging corporate credit spreads are now at a very, very low level. It is so low that it's basically back to what happened back in '07, and that was where we know that the market got very complacent, and of course that was where the start of the entire Lehman crisis. So with all this thing telling me that I think we need to be very, very careful moving forward. And because right now the share of the market cap versus population, we are going back again to the year 2000 level, whereby you can see that in US itself, the population back then versus the market cap is about 48.9, and now we are back to the same level. And we all know that in 2000, that's where after that the market prick, and we have 2 years of selling. So will this be happening again? Well, the thing is this, we know that now we are very overvalued. And of course, if this is going to happen again, it will repeat the 2000 dot-com crisis, and it's seemingly really happening. And now we can see the high grade yields, the TLT versus the high yields are now showing a compression. And if that's going to continue itself, right, this is a massive divergence. And of course, we all know that if this is going to rebound, then of course the environment, the risk on environment is going to tell us that we need to be very, very careful for the stock market. And of course, the CBOE volatility index now is superly compressed. As you can see, it's so compressed right now. It's like, it's going to be anytime, right? Anytime there will be a very strong rebound on the VIX. And of course, if it does happen, that is because the stock market must have slowed down quite badly. So based on what I'm seeing right now, it's very clear the next 3 to 4 months, the VIX usually will be pumped up by at least 50%, which means that the S&P 500 or the US stock market should be pulling back in the near term. And of course, if you look at the seasonal pattern, this is what we saw. It's always the very strong July month, which you saw it happening now. And then after that, there will be a pullback of, there'll be a sideway first for the first 2 weeks of S&P. And then the third week, we will see the market selling quite badly. Then of course, there'll be an intermediate rebound in usual and before a heavier one in October. So personally, I believe that there will be some selling from the third week, all right, for the S&P 500. Now it could be earlier too, but then again, based on the seasonal pattern, this is likely could be happening And then if you look at the July-August chart, you can see that it usually have this pattern. Now let's go back to what happened in 2022. That was back in July. The market went up a little bit more for the August period before slamming down all the way from the high of 34,000. Okay, just for 34,000 here. And it went all the way down to 29,000. Okay, so that will happen in 2022. And then later on in the 2023, we saw the Dow now slightly higher at 35,000. And then after that, the market just slammed all the way down to this point here, so 33,000. And of course, in 2024, we saw something like this where the Dow was trading about 42,000. And within a couple of days, the Dow slammed down to 39,000. So if you look at it over across, it's an average of 3,000 points. So where are we right now? 44,800. So I believe that it could be a 3,000 point or 2,800 points. So we should see the market touching the moving average about 42,500 level. You think will happen? Well, I think that it's very, very possible for the Dow Jones to fall in this manner. So traders, you just need to be watching this chart very, very closely. And I think that this will happen because now we are very overvalued. But again, it's time to trigger. No, it's not the time yet because based on our indicator, the boys are still buying. Yeah, still buying. The retails are still buying, so it's pretty bullish right now. The market is above the moving average too, so everything is status quo. But the thing is this, when the market wants to sell, it will turn to red color first, and then after that, the boy accelerates selling, and then that's where the real selling began. So we are just watching it now at the moment. Of course, there's still a lot of reason can the market going to go higher due to the earnings coming in and stuff like that. But I suspect that Apple earning may not be good. So let's watch this closely on Thursday onwards. Yeah. Now the Buffett indicator, as you can see right now, is really at the overvalued level at the 213%, one of the highest, if not the highest level for the Buffett indicator. And of course, the thing is this right now, the market is expecting inflation to continue to hit, and that's why Jerome Powell seemingly not comfortable to really cut interest rate. Now, even he cut interest rate in the September month, he will likely was be holding back a little bit because now the market-based inflation expectation for the next 5 to 10 years have risen to the highest level in almost 2 years at an implied of 2.44%. So that means that people are really, really quite confident that inflation will be here to stay, and that is not good for the Federal Reserve, who now is being tight because Jerome Powell, Donald Trump wants a rate cut, but then Jerome Powell not keen to do that. So the thing is this, while that happened, we noticed that the dollar has been the worst performance for many, many years since basically this is the worst first half performance for the dollar since 1973. That was due to the recession. So the thing is this right now, if the dollar really continue to fall, then of course it's a very high chance that the gold price will trade higher. And I'm a big bull on the gold market, and based on the seasonal pattern, usually for the month of August and September, that's where gold will really goes up. Now again, all these are seasonal patterns since for the last 40 years, as you can see over here. All right, so let's see what happened over here, and I think that it is very possible. Now, if you look at this, every time that gold drop, right, China will always be the first one to be buying gold because you look at the Shanghai gold premium, it's always increasing when the gold price fell. So that is a very high chance that it shows the Chinese are buying gold every time. And if that is happening right now, we look at the chart, that's going to be very interesting. Now, the chart has been sideways since 2025 April. It's been staying around this area for a very, very long time. And I believe that just a matter of time, it will find strength to burst it up. So based on this calculation itself, there is a very good chance that gold might see 3754 by November 2025. Now, previously I was looking at gold to hit the 3682 level, right? And we came to the high of 3500. Now I think that this will go even higher. So the first target is still 3682, but after that, I think gold is going to go to 3754. So guys, let's see whether I'm correct or wrong by the end of the year. And I think that most likely I will be right, yeah, as you can see that. So guys, hope you enjoyed this video. Thank you for sharing this with your friends, and I'll see you next time. This is Cal signing off. Take care and have a great time. Bye-bye.